Hello, folks. This is Raj Sastri from Raj Option Trading. Today is Jan 4th, 2020, around 10 o'clock. It's a Think or Swim on demand platform. So let's look at one of my favorite stocks, which is Tesla. Clearly, Tesla is bullish. It's above 10 day, 20 day, uh, 25, 500, 200-day moving average. Clearly, it's on a bullish trend. So, how to play Tesla, which is a bullish stock? Any bullish stock like this, best way to play it is to, one of the aggressive strategies. We can do a back ratio spread. So, stock is at 737. So, we could go around 740, which is closest. So, we could go ahead and buy a back ratio call spread here. So we are buying, we are selling a 740, which is kind of a little bit above where stock is at, and we are buying two 760s. So by doing this, we are basically financing our two calls that we are buying at 760 with one call that we are selling at 740. So as you can see here, let me go a little bit down. 740 call. It's around if you see here, around 134, 135 range. So we are selling this and bringing that money in, and we are buying two 760. So 760 is around 126. So that's the plan here. It's an aggressive strategy, meaning we want stock to be bullish. So with that, let's go ahead and confirm and send. So as you can see here, we are paying 13,888. That's the cost of the trade, as well as it's also the cost of the trade is 11,888, and buying power effect is also same. So with that, let's go ahead and send it. Done. And now what we can do is we could because we are bullish here. Let's go to a little bit out, 193 days out. We could do same thing here also. Stock is at 738. We can go to 740 right here, and we could do same back ratio spread we did earlier. We are buying a back ratio spread. So we are basically selling a 740 call and buying two 760 calls. We are paying 129, which is 12,900. Same thing like what we did last time. Buying power effect is around $14,000 here. Um, let's confirm and send. All right. So next, because we're bullish, we could also go nearer term. Let's go to 25 days out, and let's sell a put spread to really finance some of our call spreads that we did. So to do this, let's go to 700, which is a round number here. We could sell a maybe a $20 wide put spread here. So we can go sell vertical 700, and we could even let's be a little aggressive. Let's sell a $40 wide spread here, which is 640. So what we're doing is we are selling a 700 put, and we are buying a 640 put. So that way our exposure here is really $60. Maximum we can lose here is $60. So we are defined risk type strategy here. In the meantime, let's wait for stock to buffer and see what's going on. Let's give it a minute. In the meantime, we can also quickly look at a Yahoo Finance chart for Tesla to see how Tesla is doing. As you can see here, Tesla, market cap, between 2019, 2020, steadily went up, as you can see. And between 2020 and right now, which is hardly a year or so, not even a year, stock kind of market cap kind of more than doubled, as you can see here, and it did the same thing between 331 2020 through 630 2020. Market cap doubled. So clearly there is a lot of things going on for Tesla. With that, let's go back here. We are selling a put spread here. So we are selling this, $60 wide put spread. We are collecting $18 credit. And as you can see here, our cost of the trade is 1,880. That's the max profit. And for this, we want the stock price to be above, 680, as you can see here, 681 to break even. Generally, if the stock is above 700, we are golden. We can collect entire money. Let's go ahead and send it. And we can also, do 32 days out. We can do the same thing. We can do a put credit spread. We'll do same sell put spread, and we'll do 640, which is $60 wide spread. There you go. We're collecting $20 here. It's again 32 days out. Typically, we don't want to go too far out with the put spread, selling the put spread. Typically within 45 days to expiration. So we'll do same thing here with the 39 days to expiration, 700, and selling a put spread here, 640. All right, $22. And last we'll do 46 days out. We can do same thing. We'll sell a put credit spread here. 700 is our number, and $40 wide spread. There you go. So we are collecting $22 here, which is not bad. All right, so now we got one more option chain here. We can see what to do. We got 74 days out. And what we can do here, if I go back to chart here, we got stock is going up. Let's look at Yahoo Finance for a minute. Let's go to summary. If you go to summary, we have a earnings date coming Jan 27th. So if you see here, if I go back to the option chain here, we are at 19 March. So we are, this will be just maybe a couple of months after the earnings. So, we are looking at earnings exposure also here. So with that, we don't need to wait till earnings. We can close it out earlier. We could do same thing. We can actually, sell um, a call back ratio spread here. Let's go here, go to 735 right now. So yeah, let's 740. We can just do a call back ratio spread. This is good enough. So we are paying about $73.63. As you can see, because this is 74 days out, the money we are paying, kind of, reduced from what we paid earlier. Confirm and send. Let's see if you have any open orders. Okay, this is the only open order. 763, 762 should fill any time. In the meantime, let's look at Tesla chart. A different chart pattern here. Let's look at here. So if you look at Tesla, right now, RSI, relative strength index, is actually telling us it's hitting the ceiling or hitting the max line here, which is it's becoming stronger, and IV, implied volatility, is trying to go up a little bit as we speak, and DMI, clearly DI plus is above DI minus, which is the blue line, DI plus. So ADX, which is the white line, is trying to go up, which is a bullish sign. And volume average, as you can see here, on balance volume is going up, which is again bullish sign. Chocolate money flow is telling us money is flowing into the stock. All bullish signs here. With that, let's go back and see if we okay, so here 73.90. Let's increase our debit to 73.90 or even 74. So let's get this closed. All right. So with this, let's go back to as far as we can go out with the Thinkorswim on demand, which is Jan 14th. And let's see in this, from 4th to 14, 10 days, how did we do? And with that, let's go to monitor tab here. All right. So we have Tesla. We did a couple of long, positions on back ratio. So let's go to our back ratio. So as you can see here, all our back ratio, this is 64 days out, 155 days out, and 183 days out. All of them, made money. And we can start closing these guys out. Let's close this one here. It's for 10 days it's a very good profit, as you can see. Let me go back here quickly. For 10 days we made 25 grand, not bad at all. Let's go close it, and we can do same thing here. And one more. Okay, now let's go to our put spread. We sold some put spreads to really finance our long calls. So for that, let's go to vertical. As you can see, we made 5K selling this nearer term put spreads. So we sold three put spreads. One is 36 days out. 29, 22, as you can see. Now, 10 days progress, so days got reduced a little bit. But all of them, as you can see, made money for us. So, we have a choice. We could wait till the expiration date, or we can close it out. It's typically when you make a good amount of money in 10 days, it's good to just close it out, look for next opportunities and take it from there. With that, I'll go ahead and close it out. All right. So with that, just to recap, what did we cover? We basically talked about how to play an aggressive stock like Tesla. You replace the name with, if you want to, instead of Tesla, if you like Shopify or Etsy or any of these, say cybersecurity stocks like CrowdStrike, Palo Alto Network, you could do that to even NIO for that matter. So when your outlook is very, very bullish, you could do a back ratio spread. Typically go out at least 90-day or even a little bit further out like we did. So sell some back ratio call spreads. And you can also finance that sale by selling put vertical spreads nearer term. In our case, we did 25 days out, 32 days out, 46 days out, something along those lines. That will basically help you to earn some income in the meantime to finance your longer term call purchase, or the back ratio call spread purchase. And you could even do a lot of other things I'll cover in the next video. But in a summary, if your outlook is bullish, you could do something like this: go aggressive with the call ratio spread, and in the meantime, finance your call ratio spread with some of the put credit spreads, so you don't lose too much money. It's a defined risk type strategy, and take it from there. Hope this helps. Happy trading. Thank you.